Hi everyone, today let's talk about threads. Then we'll take a look at the sentiment data, the economic calendars, Max Pain, then we'll get into the charts, as well as my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Threads is now a thing. It's basically a copied and pasted version of Twitter. Apparently it's not as good. I haven't used it personally, but all the reviews I've been seeing say that it sucks. There's no hashtags and it's hard to get into conversations the way that they are on Twitter. I do think it will be interesting to see if Twitter takes any legal action towards Meta's new platform. They are definitely leveraging their footprint already with Instagram and Facebook, allowing you to follow basically all the same people on Instagram. I do think it's interesting that Instagram is really different in terms of who you follow and what you follow them for on Instagram versus what you would follow people for on Twitter, which is more of a conversation and news platform in my opinion. And I don't think that Meta has the same values that Twitter does. And a lot of the people that are on Twitter are on there for a reason. Mostly the free speech message that Elon puts out on Twitter in terms of their platform. I think it'll be interesting to see how this plays out over time. I'm sure Threads is experiencing some difficulties with their early launch, and they'll continue to tweak it and make it better. But the question is, will it actually be a true competitor to Twitter in the longer term? And I think that remains to be seen. Moving over to the sentiment survey, you can see we got another one-year high this week. Stepped up from 41.8 the previous read up to 46.4. Very, very high bullish reading, which is interesting considering that we did not get new highs and RSI seems to be weakening. We'll look at that more on the charts. But bulls continuing to step in here, buying the dip a little bit. And I do think that that is going to be a little bit premature and that we're going to see more of a pullback next week. And again, we'll talk about that more on the charts. Moving over to fear and greed, just for a moment, you can see we're still in extreme greed, but it did step down a little bit from the previous week. Momentum, still extreme greed. RSI, also extreme greed. Breadth, extreme greed, but it's a little bit more reasonable when you compare it to some of these other reads. And we'll look at breadth later on the charts as well. Put call ratio, still very low overall on a 5-day average in extreme greed. Volatility index, it is perking up a little bit. You could definitely say neutral there. Safe haven demand only in regular greed now, which is interesting. Junk bonds also dipped quite a bit this week back into regular greed. And now that we're seeing that breakdown from extreme greed, in my opinion, that's going to give us that pullback. It's not typically when you see extreme greed that you're going to necessarily get an immediate top. It's when you start to see that pullback from extreme greed into regular greed that you're expecting a little bit more of a swing, more similar to a pendulum. Moving over to the economic calendar, there's not a ton for this week until we get to Wednesday, core and headline CPI reads. I don't really expect this to be a huge mover. CPI has been fairly muted recently, and I don't expect that to change, at least in the short term. Inflation continues to taper in the United States, and I don't expect that to change on this CPI reading. Of course, you have to pay attention to it and make sure you understand that that's going to happen on Wednesday. But like I said, I think it'll be muted, similar to what we've been seeing. Looking at Thursday, we have PPI, core and headline. And then Friday, we get a bunch of Michigan numbers, including their inflation expectations, as well as consumer sentiment. Those are really the most important in my opinion. Moving over to earnings, yes, earnings season is coming back. Not really much until we get down to Thursday, where we have PepsiCo, as well as Progressive, Delta Airlines coming in. A couple of those early reporters coming in next week. And then on Friday, we have United Health, JP Morgan, Wells Fargo, BlackRock, Citigroup, being those first couple banks starting to report their earnings. And we're also starting to get some of those regional banks, which would be interesting. Hopefully they're continuing to do well and we won't have any major issues here. But earnings season starting off next week. Moving over to Max Pain for the Friday expiration, you can see just how few options there are, less than 700,000 for the Friday close. But look at these calls here. So huge calls at 442. This continues to step down for the highest call strike. Highest puts at 430. Again, another pretty substantial move down for next week, in my opinion. So looking at a close in between those two peaks. Of course, these could shift during the week, and we'll continue to talk about it here. Max pain is at 440, but I could absolutely see a close in this range here between 434 and 440, and I wouldn't rule out a close down at 431 either. Definitely interesting to see this range continuing to go lower this week. Put call ratio still quite high at 1.48. Zooming out here, you can see that's a little bit artificial because of all of these puts that are way down in the markets here. 345, 360, 370. These are all expected to be out of the money in my opinion. That would be a massive move for the SPY, but you do have to pay attention to them when you're looking at the put call ratio. But otherwise, looking at that normal range here, 430 to 442. Moving over to the charts, starting off with the S&Ps here on the weekly chart. You can see that red bar that we got inside week, still holding those same highs. Looked like a double top on the shorter time frames, but you can see we got a decline in RSI. Highest RSI week was actually the 12 June week. Lower RSI read on 26 June, and it does seem like this is starting to pull back. You can see that 9-week moving average sitting at 4,300, which was that highest put strike. So people trying to enter the market at the 9-week moving average makes sense, which would still be a fairly substantial move down from here. You have to be at least a little bit bearish going into this week, in my opinion. This looks weak. I would expect continuation back down to a little bit of mean reversion. Doesn't mean we can't hit this trend line in the 9 EMA and then continue higher, but at this point this move looks a little bit exhausted to me, and I am expecting at least somewhat of a pullback next week. Moving over to the daily chart here, you can see what it looked like on that double top. Clear double top in my opinion. We have an island reversal for that second top. We threw a big wick on Friday and then closed really close to the lows. Momentum bearish, RSI bearish, just like we talked about in the Friday video. We have the 21 EMA sitting at 436.55. I would expect to tag that at least once this week. And then if we did get down to that 430 range, you can see I have a level at 428.59. And 430 would also take out this midpoint from this double top. And then you have the 55 EMA sitting down at 423.05. That would be a really substantial move down, and that would start to push into those puts that we talked about on max pain. I don't expect a hold down in this region, but you could absolutely see a dip into those lows and then a pullback into that 435 range to satisfy that max pain expiration. But any way you look at it, this does look more bearish this week than it did last week. Moving over to the NASDAQ here on the weekly chart, very similar setup. Inside week, again looking bearish. We're a little bit further off of that 9-week moving average, sitting at 14,523. Again, that would be a takeout of this midpoint if you're looking at this like a double top. Momentum bearish, RSI also showing divergence and stepping down. Overall, the trend is similar to the SPY. I'm expecting at least a little bit of mean reversion next week, pulling back into that range. Moving over to the daily chart, you can see that same setup, double top or a lower high actually a little bit in this case. Island reversal, still holding the 9 EMA, which is a little bit stronger than the SPY. You could argue for a little bit of neutrality here on the NASDAQ. Momentum and RSI are both bearish on the daily chart, just like the SPY. 21 EMA sitting at 363.59, which would be about a 1% move, and I do expect to tag that at least a little bit next week. Certainly could hold that level and then chop sideways until these EMAs consolidate a little bit, and then we'll break below them and then look for a retest of the 55 EMA, which is currently sitting all the way down at 342.75. That'll continue to drift up as these EMAs consolidate, in my opinion, and then we'll start to see those bigger dip lows, and then eventually we'll see a reversal back into the longer term EMAs and SMAs, which are currently sitting all the way down around 300. So pretty substantial distance here, which is why I think we're starting to see that consolidation and set up for a little bit deeper pullback. Moving over to the Russell on the weekly chart, you can see this consolidation and the breakout that we've had. We are still holding trend on the weekly chart. Everything looks okay to continue higher. We're still below the 144 EMA, which is sitting way up here. You can see it's only doing that because we've consolidated for so long in this zone. The Russell continuing to look more neutral and maybe even slightly bullish versus the other EMAs. Momentum did step down a little bit, but RSI showing a consolidation and holding above that 50 level, indicating we could see a little bit more bullishness going into next week. And looking at that on the daily chart, you can see we did have that double top setup, but we threw a long wick into these longer term EMAs. And then we had a pretty bullish day on Friday, holding back in this range, still below the shorter term EMAs in VWAP. but you could absolutely see a gap lower, wick rejection, bigger move up, and then a continuation back into this range. And if 189 breaks, then we're starting to look at 195, which would be a nice little move higher here on the Russell. You need to see that follow through, and momentum is still bearish. But RSI bounced off that 50 level and then started to move a little bit higher. And there's certainly an opportunity for more bullishness on the Russell versus the SPY or the NASDAQ. Moving over to the Dow here on the weekly chart, you can see we had an engulfing red candle. Definitely not what you would want to see if you're looking bullish, but we are at this trend support. We're also retesting this longer term downtrend line. So far it's held. We came in, retested that 2 weeks ago, bounced higher up to major trend resistance, rejected from that level, and we're back to the shorter term trend once again. If this picks up here tomorrow and we break this longer term trend, that would be very bullish here for the Dow. You can see a lot of open space. We would have to get through these previous highs, which we continue to retest at the longer term resistance. But like I said, if we do break this level, there's quite a bit of open space before we get into major resistance here on the Dow. Momentum stepping down as you would expect, still consolidating. We did just barely get into that 9-week moving average, just a few pennies below it. But like I said, trend support, RSI showing divergence to the downside, but still above the 50 line. Clearly consolidating here on the Dow, not giving clear direction yet. But if it's going to bounce, you really need it to bounce right now at trend support. Otherwise, you're looking for a pullback down into these lower EMAs, probably down to the 55, sitting down at 328.07. Moving over to the daily chart, you can see that similar setup, lower high, island reversal, looking weak. We have that midpoint here, watching that 335.91 level. We're in a clear breakdown of this shorter term trend on the daily chart. Momentum and RSI are both quite weak. You wouldn't look for an entry until we at least hit 335.91, and honestly, I would expect that to break at this point and start to look down to these lower levels like we talked about on the weekly chart. Moving over to the equal weighted S&Ps here on the weekly chart, you can see momentum is still bullish. Volume stepped down on the weekly chart. We're still stuck at this 149.82 level. Certainly could pull back to the EMAs and SMAs, but the weekly chart is still very bullish. We're not super extended here, so it's a little bit different picture than the regular S&Ps. It's also worth noting that you have clear divergence with the lower high setting up on the equal weighted S&Ps versus that much higher high that we're seeing on the regular S&Ps. I was hoping this would fill the gap and start to move a little bit better together, but it does seem like we're topping out at least a little bit with a lower high on the equal weighted versus the regular S&Ps, indicating that some downside could be to come. Moving over to the ratios, starting off with the NASDAQ divided by SPY and NASDAQ divided by Russell here. Basically nothing has changed from the previous Sunday video. You can see we're still at this 343 level on the NASDAQ divided by SPY. Still consolidating, still at a key level. Does look like it's going to reject from this level in my opinion. Similarly here on the NASDAQ Russell, we've been watching 818. And this 818 level is from the high during the .com bubble. We are retesting that level once again on NASDAQ Russell. And similar to the other charts, you can see momentum pulling back, RSI also pulling back, indicating that we should see some Russell outperformance and that the NASDAQ should underperform going into the coming weeks. Moving over to SPY divided by the M2 money supply, we did get that inside candle pulling back once again from that 2122 level. We've tested that for 3 weeks here. We didn't test it on the week of the 20th, but the other 3 here we did test that level and then reject from it. Closed above it last week and then rejected back below it this week. This is a fairly important level, and you can see the last 2 times that we did get above this level, we had clear rejections, which were very substantial. Obviously, this one was the COVID move, and then this was 2022. Zooming in a little bit here, you can see the trend is still intact, but we are seeing a little bit more resistance than we have recently at this key level, and it would make sense to see a deeper pullback, maybe even all the way down to 1992. That would be marking the highs here from August of 22. Moving over to Apple and Tesla here on the weekly chart, pulling back a little bit from its highs. I did put a level at that previous high, which is interesting. We're still at the trend line here, the one that's been dictating most of this move here recently, and it could absolutely go higher from where it is, but it's an interesting pullback. That's the first pretty negative weekly close that we've seen here on Apple in a while. Momentum basically the same as it's been. RSI pulling back fairly substantially from very overbought conditions. You could absolutely see a divergence form here on Apple, and then we see a continuation down. but it is fairly interesting to see that inside candle from the previous high after closing at its high last week. Volume stepping down pretty dramatically. It does seem like we're a little bit complacent here on Apple. Obviously, it's been very powerful over the last several months, so I wouldn't necessarily short it, but it is interesting to see. Tesla, gap up, basically held in that zone. We're in this previous consolidation, and I'm still watching that 302 level at this previous high. Certainly could go up to that level before we get a major pullback. Overall, everything is still intact on Tesla, just barely short of overbought conditions here on the weekly chart, but we are fairly extended now off of the 9 EMA. Doesn't mean we're going to pull back, but it is worth noting. Moving over to Microsoft and NVIDIA, you can see Microsoft retesting its all-time highs from November. In this most recent consolidation, got an inside candle on the weekly chart, again indicating some pullbacks to come. Momentum has been slowing. RSI continues to pull back here. Everything looks like Microsoft is going to pull back a little bit more next week. Moving over to NVIDIA, we got a doji. I've had 3 dojis in a row at this point. We're at all-time highs, so you do have to be careful, similar to Apple here, but momentum is also fading. RSI on the weekly chart, super overbought. These are 2 of the biggest AI plays, so they could absolutely go higher for no reason at all, but the indicators are showing a little bit of a pullback to come next week. Moving over to staples and discretionary on the weekly chart, you can see staples has been chopping for a while in this zone. We did set up a higher low versus this previous low, but it does look like we're setting up a lower high here. The 3 previous highs had been at that 77.50 level, and it does make sense that we would see a bounce from this area and then a push back into that zone. Certainly could still happen, but it doesn't look very strong right now. RSI breaking back below the 50 line. Momentum bearish. Everything looks a little bit weaker here on staples than I would have expected. And it looks like we might be getting a move like this here from January and February of this year, where we came down, tested this area, ended up making a lower low at the 144 EMA. If that happens, that would be a push down to 71.97. Then we would get the bounce and then push back up into this previous level of 77.50. Certainly could happen just like this, and it does seem to be setting up that way. Discretionary, finally getting some rejection off of that trend line. We'd been talking about that for a while. Momentum stepped down, RSI stepping down from overbought conditions. We don't have divergence yet on the weekly chart, and we did not get up to this previous wick high like I thought we would. So this could absolutely go a little bit higher, hit that level next week or the week after, and then get a more decent pullback. But this is clearly extended on the weekly chart. And you do have to respect that down candle, which is something we haven't seen in quite a few weeks here on discretionary. Moving over to transports here, you can see this big move down that we had at the end of the day, and that big move after hours on the hourly chart. Everything looked pretty weak. The selling continued into the close. Volume stepped up on those last couple candles. And looking at the weekly chart, you can see we're still at these 2 previous highs. We could absolutely break out from this level. Does seem like we're establishing this trend here now, which would give us a price target up around 263.50. That would be a huge move on transports and could absolutely happen. Momentum is still bullish, RSI still bullish on the weekly chart, but we are seeing a little bit of weakness on the shorter time frames. Moving over to the sectors for the month, discretionary, technology, communication, and financials are leading the pack. Semiconductors moving back into the middle of the pack here. Gold at the bottom, energy sitting down here. Oil and gas, not too bad at 0.5% over the last month, but it is a little bit more even. Still risk on, but not as crazy with semiconductors and technology. Moving over to breadth here on the 50 and 200-day averages on the weekly chart. Both of them had a down week from resistance, but momentum is still bullish and RSI is still bullish on both of these. We talked about it in the daily chart. There is a little bit of weakness on the shorter time frames. And you can see what that looks like here, coming into that resistance, breaking down, retesting the 9 EMA, throwing a big wick here on both of these charts, indicating that we are seeing some weakness, momentum stepping down on both of these. RSI still bullish, and the trend is still bullish as well, so you have to respect that, but it does seem like we're getting some resistance at a key level. Overall, longer term still bullish, shorter term showing weakness. Moving over to yields, I don't typically talk about yields here in the Sunday video, but they have been driving much higher. You can see both of these making recent highs on a closing basis, which has been driving down the markets. Bullish momentum on both, bullish RSI on both. And look at that candle here on the 10-year pushing all the way up to above 4%. We haven't been in this range since October of last year. And if you remember October of last year, we were much lower in terms of stock price. So keep that in mind as we go into this next week of trading. If yields continue to go higher and we continue to see hikes coming from the Fed, which I do expect to happen in July, and then probably one more later in the year, and we see these continuing to go up, we should expect the stock market to move down at least a little bit. Moving over to the dollar here on the weekly chart, you can see this big red candle that we had through a wick to the high from last week. And then we closed basically on our lows here, looking to move lower based on yields going higher. Kind of interesting to see. Momentum still bearish, RSI still bearish, and it does look like we're going to push down to 101.25, if not lower, and retest the 144 EMA down at 98.6. That would be a huge move lower for the dollar, which could help prop up equities a little bit, even with yields going higher. So something to watch here, dollar weakness expected going into next week, which might give equities a little bit of strength. Moving over to JNK and TLT here on the weekly chart, you can see momentum basically zero on JNK. We did break this trend line, closing below it for the first time. This looks very weak. We're back below $91 on a closing basis. And it does seem like we're going to head back to these previous lows around 89. As yields go higher, we should expect bonds to continue lower. TLT had a huge bearish week coming off of the consolidated EMAs. We're at this previous low here, February of 23. And if that breaks down, I'm looking to 96.50 as the next level. Huge bearish candle closing on the lows. Solid volume, momentum bearish. Everything looks like TLT is going to continue lower as yields continue higher next week. Moving over to the volatility indices, on the weekly chart, you can see the MOVE index had a huge bullish week. Momentum moving towards bullish, RSI crossing the 50 line and looking more bullish. It's been elevated for a while here on the bond index, and it does seem like this is going to go higher once again. Moving over to the VIX, you can see we did not get above 1490 on the closing basis or above the 9 EMA, but we did have some signs of life. We did have a green candle. We did throw a big wick. Momentum moving more bullish, again indicating that we could see a continuation next week, meaning that equities would be moving lower into next week and potentially the week after. Moving over to my accounts here, I did okay. I was down about the same as the NASDAQ, maybe a little bit more. I need to be better about putting my alerts on the charts so I know when to be getting out of positions as they move lower, which I did not do a good job of last week. Otherwise, looking at my positions, I do have one put here on the Russell. Like we talked about on the ratios, I expect the Russell to outperform. Looking at the NASDAQ, I have a neutral position, one put and one call. A little bit more bearish as that call is closer to the money with a bigger credit, but overall, and it is a very small position as well. I want to see a little bit of evidence or conviction in one direction or the other, and I do expect that to be ultimately bearish on the NASDAQ. Let me know what you think about threads down in the comment section, or any of the economic factors that we covered. What do you think we're going to see in this earnings season? And will this be the earnings season that breaks the camel's back and starts to push markets lower? So far, earnings have been resilient, but I do think this earnings season could be a little bit different. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.